Hello, everyone, and welcome to the Monday Open, hosted by the Vantage private client team. My name is Ollie, and joining me today, fresh off his baseball finals, we've got Steve. How you going, Steve?
Hey Ollie, I'm good. Good afternoon, everyone. Yeah, I'm good, especially after that. But yeah, commiserations on the loss on Sunday.
Oh, mate, Manly are down and out, but the Premier League's back, so I can't complain. All right, so moving into the agenda for today. For anyone who's been here before, this will look pretty familiar, but for any of our new viewers, this is how we usually do it. So, starting off, we'll have a look at the key events of last week to highlight any of the major market moving events, have a look at the key themes, and see how these ones move markets. We'll then move into the week ahead, where we'll put a spotlight on some of the key events for the upcoming week and take a look at how those will fit into the key themes and give our take on how we'll move prices. We'll then move into the technical corner, where we'll put a spotlight on a couple key different markets and analyze them using our technical indicators through a top-down analysis. And lastly, we'll move into our Q&A section, where Steve and I will answer some of your guys' most commonly asked questions from the week prior. So, moving into the last week section, starting off on screen, you guys will see your guys' most traded products from the week prior. Got a new addition in there. We've got the DAX, or the Germany 40, as it is otherwise known, probably to the surprise of nobody, given that equities are on a very good run at the moment, hitting all-time highs across the world. How about you, Steve? Any surprises in there?
No surprises with that, especially with a lot of the central banks looking to cut interest rates. So expecting a lot of basically going out of risk-off sort of assets like gold, for example, onto risk-on when it comes to equities. So definitely no surprise when it comes to that.
Too easy, right? So, moving to the events of last week. Steve, do you want to take us away with the RBA?
Yeah, so last week, as expected, we had the 25 basis points when it comes to the interest rate cut. There was no real surprises with that. The only real surprise was actually to do with the statement. So it was actually really interesting to see what Governor Michelle Bullock issued. Basically, with the statement, what she said was she gave us a shock warning about productivity growth, warning that the economy is actually unable to sustain growth faster than 2% per year. So, what the implications of lower productivity growth is that the real wages itself won't really be rising, and the implications is that real wages can't grow as quickly as possible. So that's what Bullock actually said. She really actually mentioned that the RBA can't actually do anything, and it's really up to the government to step in. So whether they'll step in with some fiscal policies, it's hard to say. But the other surprise that she did mention was in regards to the data based off two sort of interest rate cuts. So she alluded to that. So we could be seeing, two interest rate cuts. She did quickly say three. So there was a lot of traders that would have probably picked up on that sort of tone. And looking at the Guardian news, they were alluding to maybe further rate cuts by the end of this year, and possibly another one by June. So it's pretty interesting to hear, I guess, what I would say is a sort of diverse sort of outlook. So, but it surprisingly didn't have too much of an impact. It wasn't within the Aussie. It did shake it up a little bit with a bit of volatility, but it still remained fairly steady throughout the week. But yeah, definitely very interesting to hear from that perspective. And then, yeah, I mean, we also looked at the Australian unemployment, which was actually post the announcement. So, yeah, did you see anything in regards to that, Ollie?
Well, in terms of the employment for the Aussie markets, I guess week on week. So the Aussie 200 actually did close up, reached its all-time high intraday trading on Friday and closed at an all-time high for the weekly. So seems like the comments may be alluding to, three more rate cuts instead of two definitely did help to boost on the Aussie. I think I did fall off quite quickly, as you mentioned, from the productivity sort of argument. The Aussie was mostly down against most currencies over the week, but that's probably to no surprise given that we are in the easing cycle at the minute.
Yeah, no, definitely. And I guess the next sort of RVA next the meeting when it comes to September will be the 30th of September. So it'll be interesting to see with the sort of predictions closer to that date. We did also see a lot of the sort of UK, so we saw the GDP being a bit higher than expected. But throughout the week, it was really around the US data that came. So what we had at the beginning of the week was around the consumer price index, or the CPI, which was showing basically as expected. One of the points was a little bit lower than expected, which gave it a lot of sort of optimism, especially around the US. So they were, seeing that basically the inflation was steady. But towards the end of the week, we saw the producer price index, and the producer price index is basically the impacts of the actual companies, for example. So we saw a very shock surprise when it comes to that, and that really outweighed all the optimism throughout the week. So it led to a stronger US dollar, as well as it's really pushed that sort of talks about the tariffs and really the impacts. So just looking at that sort of data, I think what we're seeing is that there is really an impact to tariffs, and I guess from my perspective, I'm just wondering who's going to be actually paying for the actual increases. So whether it's going to be the US consumer, or whether it's going to be the actual companies itself. So at the moment, we're probably seeing that with the CPI figures, a lot of the companies aren't actually basically impacting the actual prices because they're absorbing and keeping market share. But it's not sustainable, in my opinion, for the long run. So it'll be interesting to see how that pans out. Post that, we also saw weaker than expected retail sales. So the retail sales, as we probably kind of expected that would be a little bit weaker. We also saw strong unemployment, the employment claims. So it kind of counteracted a little bit around the PPI data. So it was very, very interesting to see. Very sort of mixed data, but really the headline was around the inflation and the impacts. On the China front, we also saw weaker retail sales, considering that it is one of the big sort of economies. It really showed, I guess, a slowing in the actual spending from the consumer itself.
Well, I guess we kind of see that in the Chinese retail sales data, but also highlighted on the screen, we got the other key and notable events, something we will be continuing to do on the Monday Open. So listed out there, we did see all-time highs on some of the major indices across the world for six of the major indices across the world. Could see on there, obviously coming in there. I did want to put a little bit of a highlight on the UK's FTSE 100, which did hit an all-time high daily close on the Thursday before selling off and the lead up towards the Trump/Russia/Ukraine ceasefire talks. Obviously, as a few traders started to move into markets which may have benefited from a ceasefire agreement. So obviously, this is all coming from reports from Bloomberg. Also wanted to put in there, Bitcoin did touch on an all-time high. So I did touch on this in one of the technicals a couple of weeks ago for the Monday Open, where price was sitting. We were looking for it to test at an all-time high before pulling back a little bit to find support back into its previous trading range for continuing its run, which looks like that is playing out now, as well as for the Trump/Russia/Ukraine talks, which I just did mention on there. Long story short, there's not really too much of a deal which has been met. There hasn't been much of a movement in the markets as a result, but it seems to be all good signs for the moment. They are saying that talks are progressing quite nicely, although as for the timeline for that, we are still yet to see. So I'll take this into the next, for the week ahead section as well. So starting off, we've got the RBNZ. So for the New Zealand Central Bank, I have touched on this in previous videos, but the RBNZ historically has been really good at forecasting their predictions or their intentions for future rate cuts. In this instant, for the meeting coming up, we're forecasted for a 25 basis point cut to 3%, and I'm not expecting too much of a sway away from that in this instance. one of the other sides of this that they do forecast these events prior to the announcement is that we do get to see traders pricing in these moves largely ahead of time. So this actually has been seen on the New Zealand dollar. We have seen the Kiwi did weaken across the board against all major currency. It looks like traders are starting to price in that weaker Kiwi on there. So moving in as well, we've got some CPI data coming from Canada, from the UK, and the Eurozone as well. So for the inflation data, though, I did want to put a bit more of a spotlight on the PMI data. So the Eurozone's main refinancing rate currently is sitting at about 2.15%, with ECB President Lagarde previously commenting that the Eurozone has achieved its 2% inflation target. So where I'm going to be looking at the PMI data is where this fits into this inflation data, and whether this gives us a bit of a hint towards the easing cycle for the ECB. If PMI comes in higher than expected, we may see a case held for holding the rates for a bit longer. Otherwise, if we do see it come out lower than expected for Eurozone as well as across Germany and France, we may see the likelihood of a further rate cut in the short term go up higher. So we could see some traders start to price in a weaker euro as a result. Then also, lastly on there, we've got touched on for the United States PMI data. Well, it'll be interesting to see how this all ties in with the data which came out last week for the inflation.
Yeah, definitely. Especially with the USO data, just to see whether the actual purchasing managers index PMIs. So if we can see whether there's any sort of strength or any sort of weakness, there's definitely going to be really a heavy spotlight this week on a lot of the US data. So not only is it just the PMIs, we've also got the FMOC minutes. So it's basically the meeting minutes and around the US rate decision, which obviously last time we saw that there was dissent previously with two of the Fed members. So it will be really interesting to see what the sort of decisions were between all the sort of members. Also, really the unemployment. So the unemployment will continue on that sort of narrative around the US, as well as really the Jackson Hole Symposium. So basically, the Jackson Hole Symposium is really a gathering. So it's amongst all these sort of central banks as well as economics around the world. And we've actually got the US Fed Chair Jerome Powell that's actually speaking at 12 a.m. on Saturday, Sydney time. So a lot of traders are actually going to be really looking into sort of clues. I think with Jerome Powell, there's going to be a lot of questions also targeted at last week's US data, especially with the inflation concerns now coming out of the US. So it will be really interesting to see if there are any sort of indications as to whether there is actually going to be a September cut. Obviously, post last week with all that sort of data, the projections on the US interest rate cuts have actually changed. It was almost around 100%, but it's now probably down to about 90%. So any sort of future clues, as well as the sort of you know any reaction to the inflation data, I think it's going to be key, and you'll probably see a lot of volatility throughout that whole speech. I recall last time when Jerome actually spoke in the actual symposium, it basically would have wiped out a lot of traders. So definitely be careful with your risk management sort of strategies in regards to that.
Oh, sweet. All right. Thank you very much, Steve. So I'll move into the technical corner. Let me just share my screen with you all. I've been told by one of the guys in the room with me, sometimes I'm a little bit quick to start on the technicals. So just going to give it a sec to let it load. Just got the all clear. So let's go into it. All right, starting off, we're going to be looking at Ethereum. I'm on the monthly chart for Ethereum right now. So looking at recent prices, I guess near-term prices from this year, we're in a pretty good bullish run. I've highlighted by the light blue line just here, the 4,000 price point, which has acted as a significant resistance price on multiple occasions over the last couple of years. We can see prices have moved above and failed to close on the monthly on multiple occasions pulling back, but most recently we did see a significant move above and a close above for the monthly chart, or as we stand right now. If we do move into our weekly, we can get a bit of a better idea for where we're sitting now. So we can see the prices have moved quite significantly above their moving averages. However, I do think that obviously the buying momentum is still in play. This is also reaffirmed by our MACD and our RSI lines, which are above their respective signals, indicating to me that buying momentum is still in play. So if we move it into the daily chart, we can get a bit of a better understanding of where the price action is seeing for now and identifying potential movements for where we're going to, trading opportunities that being. So I've highlighted on here, so starting back from August up until current, we are using our Fibonacci. We can see we have been on a pretty impressive bullish run. We did find a support around the 61.8% sort of mark. Around here, we can see a few days closed in around that mark before continuing on the bullish run up till the 47.20 sort of range here, and it has since been trading back down. So in this market, I still am a buyer. I'm still looking for buying opportunities. I think where the price is sitting now, I'm looking at this previous support price as quite significant. I can see the price is moving down towards it. If we see it find support on this price point and bounce up, start trading up, I'll be looking for an entry to buy with a target towards its all-time high prices, a high price point highlighted by this blue line just here. However, I do want to make sure that I do have an effective stop loss strategy in play. Given that this 4,000 price point is quite a significant resistance or previous resistance, it could act as a support. So if I'm looking for opportunities to buy at this 61.8% price point, I will need an effective stop loss or risk management strategy, perhaps down at the 50% line. I do think if we see prices move down below the 61.8 sort of price point, we will see it push even further on, potentially towards the psychologically significant 4,000 price point, or even just above to the 50% on our Fibonacci. So the next market I wanted to look at was the Nikkei. So I'm going to start off looking on the weekly for the Nikkei. Also, this is, for anyone who's not too familiar with the Nikkei, it is the Japanese index, the Japan 225. So I've highlighted on the screen here a upward trending market, highlighted by the green rectangle on the screen. The bullish market or the upward trending market is also reaffirmed by our MACD and our RSI lines just on here. So if we move the chart into the daily chart, to get a bit of a better understanding of where the price is sitting for the moment. Last Monday, we did have Mountain Day in Japan, so it was a public holiday, a bit less liquidity in the market. So when we did open on the Tuesday, we did see a significant jump up obviously up towards the upper level of our trading, of our upward trending range. So we can see opened up here. We did see a significant move above this range here, and it has traded back in. Traded back in to close out the week, although to start off the week now, we have seen a significant move above. However, where I'm looking at this price now as a trading opportunity and as being quite significant is on our RSI just down the bottom. Now, the RSI line has drifted into the overbought area, and historically we have seen that be met with a slight pullback on the price, most recently around here and around here. So that's where I'm looking for potential opportunities to trade on that pullback. I don't think it will trade back into this range. As to how far that is, I'm not entirely sure. Obviously, I think it will kind of continue trading up. Obviously, with Japan got their really low 0.0 interest rates at the moment, it's historically low. It seemed like it could have opportunities, but given that we are reaching on all-time highs, I do want to have an effective stop loss position in here as well. So I'm looking for selling opportunities, but I think I will have a close stop loss given the fact that we are seeing a lot of bullish pressure on here as well. So I think that brings us into the end of the technicals. So we'll move into the Q&A section where Steve and I will answer some of your guys' most commonly asked questions from the week prior. So Steve, did you want to take it away with question one?
Yeah, definitely. So first question is, what are your thoughts on the CPI, PPI data coming out of the US? So just like I alluded to a little bit earlier, just in regards to last week's data. So the CPI data is basically from the consumer. So looking at the consumer and how inflation's impacting, while PPI is the producer. So basically the companies. So looking at the CPI data, it was as expected. which we saw within the figures. But the PPI data was really the most concerning point. And like I said before, is that it means that it costs more in order to actually produce any sort of products, and eventually it's got to actually be filtered through. So it's whether the businesses absorb the costs or whether they pass on to the consumer. From what I was reading, is that there's a chance that maybe 2/3 of it will be passed to the consumer and 1/3 absorbed by the business. Right now, we're seeing that it's not being absorbed, or it's being absorbed by the businesses, because there's still that sort of uncertainty. And what that potentially could lead to is if it's actually passed on to the US consumer, inflation will increase, which will have an impact on gold, for example, because interest rates rise, especially in the US. It means it's stronger for the US dollar, and therefore gold would go down. So it is a really interesting story that's coming out of the US. So there are still more data points that we want to see. But from my perspective, I think it's showing that the tariffs are actually having an impact. So yeah, definitely something to keep an eye out for.
Thank you, Steve. And I'll take question 2. So we've got, how would US sanctions on Russia impact oil prices? So the reason why this would impact on the oil price is that it would put significant pressure on the existing supply levels from the other oil producing markets, which in theory would drive up the price. So if the US places sanctions on the Russian oil, this may influence other countries to follow suit. So if we think of it from a supply and demand perspective, this would it would decrease the supply of oil, while the existing demand does remain, which would lead to an increase in the oil prices. It'll also be interesting to see how this is influenced or everything by OPEC plus. So OPEC, for anyone who's not too sure, is the governing body for oil producing countries. And I believe as one of the major markets not involved in that one being Russia, if there are sanctions put on Russian oil, maybe we could see an increase in supply output from the OPEC countries, which could bring the price down. But my immediate take would be that it would drive the prices up just because the existing demand is not met by the supply. So that brings us to the end of the video today. A recording of this video will be uploaded on YouTube following its conclusion, as well as posted in the VIP chat room. For anyone who's not been into the VIP chat room yet, I would highly recommend it. Steve and I are posting a lot of articles in there all day, every day, along with a number of analysts from the Everest Fortune Group. We're also very much trying to push on with our Telegram group for the moment. So if anyone is interested in the Telegram group, I'd definitely recommend reaching out to us in the VIP chat room or reaching out to Steve or I directly. I think that's all from me today. So I'll catch you later, Steve, and thank you very much.
Thank you, everyone. Enjoy your day.
Cheers.